the sky is raining.
Hi everyone, I hope you are ready as we embark on a new topic entitled Intangible Assets. Now, these are the contents for today's presentation as shown here. Now, let us start first with the introduction. So, intangible assets under Philippine Accounting Standards 38, it is identified as an identifiable non-monetary asset without physical substance. So, ibig sabihin nito, we cannot see it nor touch it. Now, most people mistakenly take accounts receivable as an intangible asset because hindi nga siya nakikita nor we cannot see it. But accounts receivable is a monetary asset. Okay? So don't forget to memorize the phrase non-monetary asset without physical substance. So common examples included here as shown. Now, an intangible asset intangible assets are recognized only if they have the following essential elements. We have here first identifiability. Now, an asset should be separable or arises from contractual rights. Now, what do we mean by separable? So, separable, it means it is capable of being transferred or separated or divided from the entity. It can be licensed, rented, or exchanged. Now, arises from contractual rights, it means that um, it it is identifiable from contract. Now, there is a type of intangible asset that is unidentifiable. It is not considered as intangible asset. So why is it that it is not included as an intangible asset? Now, the account is called goodwill. Now, goodwill is not the same as other intangible assets, okay? Now, intangible goodwill is not the same as other intangible assets because it is classified as a capital asset and it cannot be sold nor it cannot be bought independently. Now, let us state this as a scenario, as a situation. Now, you as a consumer, you're thinking about buying something and your choices are these two stores. So, store 1 and store 2. Now, you've been hearing a lot of feedbacks, great feedbacks about Store One, and you're caught the attention that they showcase great great customer service or they have great products there. So that type, you are attracted to that to Store One because of the feedbacks. Now, other term for goodwill, it is connected to their reputation or their customers, services, or the company's operations. So, and also, it is not considered as an intangible asset because it is outside the scope of PAS 38, right? And shown here, it is under PFR is 3, PAS 36, and PFR is 10. So I think that it will be tackled by the next group, which is the impairment of assets. Now, next one here is we have control. Now, power to obtain or restrict others from obtaining the economic benefits from an asset. What do we mean by control? So why do an entity should have control to an asset? Because it is intangible. Intangible nga, 'di ba? So, hindi siya nakikita. So, as an entity, how would you show that you have the power na yung intangible asset na yan ay sa iyo? Simple, by controlling its economic benefits. Now, there are three types of control. We have number one, legal rights. Legal rights, it is dito, protected ka ng korte. And according to the law, is ikaw yung may-ari ng intangible asset na yan. Now, if anyone if anyone tries to contradict that that statement, well, you have the right to file a case against them. So second here is restraint of trade agreement. Now, in the absence of now people should know that in the absence of legal rights, it is more difficult to demonstrate control. However, it is not necessary condition for control. What do we mean by this? Showcasing the control of an intangible asset, for sure, mahihirapan ka talaga pag hindi legal rights yung ginagamit mo. But it doesn't mean na pag hindi naman legal rights yung control mo, hindi naman ibig sabihin nun, wala ka ng control. Meron ka pa ding control, pero mahihirapan ka lang sa pag-showcase ng control mo. Gets? So, okay, so restraint of trade agreement. Let's portray this as an example. So, for example, you have an employee. Now, that employee is a manager. Manager sa kumpanya mo, di ba? So, as an owner, may, alam mo na the manager, may mga information siyang nalalaman tungkol sa business operations mo na talagang mahi-use niya kapag maaari niyang ma-share sa mga competitors mo or maaari niyang i-use yon as their own benefit, di ba? So, by the restraint of trade agreement, for owners or for entities to prevent this type of situation, yung ma-use against yung kanilang information na nakukuha nila sa business nila, we have the word kontrata, di ba? Contract. So, based on the contract, mostly dinidiscourage nila na hindi dapat i-share yung mga information na nalalaman nila. Yung mga business operations, yung mga business secrets, hindi dapat nila i-share sa others yon. Because if they will, yun nga, if they signed the contract and then hindi nila na-follow yung mga terms and regulations doon, you have the right to file against them or let them pay some damages. Now, third one is confidentiality. Now, confidentiality is most likely same din sa restraint of trade agreement. So, yun nga, from the word confidential yung mga information na nalaman nila sa mga business secrets mo. For example, restaurant, tapos mayroon kang secret recipe. Now, yung secret recipe, wait lang. Confidentiality. Most halos the same siya sa number 2, which is restraint of trade agreement. But dito, hindi dapat nila sinasabi sa iba yung mga information na nalaman nila kasi confidential nga without your proper authorization. So, kaya nga, in the absence of legal rights, it is more difficult to demonstrate control. However, it is not necessary condition for control. So, yun. Third one here is we have future economic benefits. It may include revenue from the sale of products or services. So, ibig sabihin doon, future economic benefits nga. Ano bang main reason sa isang entity? Di ba, is to generate profit. So, yun, known na yung revenue from the sale of products or services. Kaya, syempre nga, ang isang asset ay dapat probable yan na makapag-produce ng economic benefit. Kasi kung hindi naman siya masasay na asset siya. Yon. Na pagdating sa intangible asset, pag sinabing future economic benefits, so paano ka magkakaroon ng future economic benefits? By generating revenue. Now, kapag nakakapag-generate ka ng revenue from that intangible asset, for example, may secret recipe ka, tapos maraming taong pumupunta sa restaurant mo, so makakapag-generate ka ng benefit at saka profit yan, di ba? Next one is cost savings. Now, having a economic benefit not only provides income, makakasave ka rin ng cost, mga expenses. So, dahil nga sa idea nga meron ka, let's connect that one from the previous, yung secret recipe. So, dahil nga sa idea na meron ka, mas mura mong nagagawa yung mga inventory mo kaysa sa ibang entity. So, another type din yun na economic benefit sa isang entity is yung nakakasave ka ng cost. Third one is other benefits. So, ano ba yung example ng other benefit? It is, an example of this is when you buy a patent sa competitor mo. So, ano ba yung patent? The patent to remove competition. So, patent, yung right ng isang competitor mo to produce or to manufacture or sell something. So, pag binili mo yung intangible asset ng competitor mo, ibig sabihin nun na mawawalan ka ng kompetensya sa market. So, indirectly, hindi siya ma-affect sa revenue mo. Pero, the thought na wala kang kakompetensya sa market, mas maraming bibili ng mga products mo, di ba? Kasi you're the only one that will provide the product sa whole. So, for this, you have many benefits kasi you have the right to whether pataasan mo yung presyo or pababaan mo dahil nga wala kang competitor na pumapasok sa market. Now, if an intangible asset, if an intangible asset is an integral part of the asset as a whole, the intangible asset is treated as PPE. Otherwise, it is treated as a separate intangible asset. So, for example, we have here soft computer machine or machine. Now, the software of that machine plays an integral part. So, ibig sabihin nun na the software is treated as PPE. Another example is yung mga laptops natin. So, laptops, they won't work without their operating software, right? So, the operating software of our laptops plays an integral part of the asset as a whole, plays an integral part of the laptop. So, which means that the operating software is treated as PPE. The recognition of an intangible asset shall be recognized initially at cost. The measurement of an intangible asset shall be recognized if management can demonstrate the items meets the definition of intangible asset. So, yun, intangible asset is an identifiable non-monetary asset without physical substance. Next, it is probable that expected future economic benefits will flow to the entity. What do we mean by probable? It means that the economic benefit is probable means is the chances of economic benefit entering into your entity or your business is more likely than not. The next one is the cost of the asset can be measured reliably so that we would know the value of it and we can measure it. Next one is measurement. An intangible asset shall be measured initially at cost. Measurement of cost depends on how the intangible asset is acquired, and intangible assets may be acquired through 5 ways. Now, the initially at cost and then subsequently measured will be tackled later on. So, the cost of intangible asset shall be different depends on its acquisition. So we have here 5 ways. Number 1, separate acquisition. It means that it is the acquiring or purchasing an asset or an intangible asset independently. Next one is acquisition is part of a business combination. Example nito is pag yung nag-merge or pag binili mo yung other business tapos yung business na yun is may kasama siyang intangible asset. Third is acquisition by way of a government grant. Granted by the government yung intangible asset na yun. Fourth is exchange of assets. It is the exchange mo na intangible asset mo sa intangible asset ng other entities. And fifth is internal generation. It is ikaw yung nag-create ng intangible asset na yun. So under that is the R&D activities. So let's start with separate acquisition.
Measure intangible assets initially at cost, but the question is, what is cost? The answer is it depends on how the entity acquires that specific intangible assets. So intangible assets may be acquired through, first, separate acquisition, meaning you purchase intangible assets separately. So the cost of a separately acquired intangible assets comprises first its purchase price including import duties, and non-refundable purchase taxes after deducting trade discounts and rebates. So the purchase price there is your cash payment, meaning how much you buy those assets like the import duties and non-refundable purchase taxes. Note that refundable taxes like VAT is excluded in the cost of purchase, and the trade discounts there is to be deducted sa imong purchase price. The second one is any directly attributable cost in preparing the assets for its intended use. Meaning these are the necessary costs like the employee benefits, sweldo, professional fees like legal fees and broker fees, and cost of that testing whether an asset is functioning properly. So there are also costs that are not part of an intangible assets, namely advertising expense, opening new location, administrative and overhead costs, cost of staff training, startup costs, and organizational costs. According to standard, cost of a separately acquired intangible assets can be measured reliably. If payment is deferred beyond normal credit terms, the cost is at cash price equivalent. But if it doesn't have any cash price equivalent, kato na lang present value nga imong gi-issue sa notes ang atong i-record. So the second one is acquisition as part of business combination, meaning there is a combining of business or buying of business. For example, entity A buys the business of entity B. So entity A has the rights to purchase all the assets of entity B, including the PPE, inventory, and especially intangible assets if naa man galing. So how do we measure it? We measure it at its fair value at the acquisition date. Meaning, dili katong cost nga imong gibaryan ang atong i-record, kundili ang fair value at the acquisition date. So there are three types of assets that we need to record. First is the common intangible assets. Maoning gi-record the acquirer noon, and if we buy those assets, we record it now at its fair value. But there's more. We also need to record the goodwill and the research and development project. So the goodwill is the excess of the fair value. For example, namalit ko sa net assets worth 1 million. And then I found out that ang fair value ay is 800,000. So ang 200,000 dito, mao na siya ang atong gitawag nga goodwill. Goodwill increases the value of the asset as a result of a good reputation. Meaning, willing ka magbayad ug dako pa ug mas dako pa sa fair value if you know that the business is doing well and has a good reputation. Mao na siyang pasabot sa goodwill. So the third one is the research and development project, which is normally expense. But if R&D arise and meets the definition and criteria of an intangible asset, we can recognize it now as an intangible asset. Acquirer recognizes intangible assets from acquiree irrespective of whether recognized by the acquiree, meaning not only those intangible assets that the acquirer recognizes are recorded, but also the goodwill and research and development are recognized now. So the third one is acquisition as a way of government grant. We all know that government grant is the subsidies or assistance that was given by the government to an entity in return for something. So ang example ani is licenses to operate. For example, kanang fishport. Fishport cannot operate without a license. So the government will give them a license so that they can operate. Muna siya ang sa government grant. So, how do we measure it? It can be measured either fair value or nominal amount or zero plus directly attributable costs.
Exchanges of assets. Intangible assets acquired in exchange for a non-monetary asset is measured at fair value unless transaction lacks commercial substance. Fair value of neither the asset received nor the asset given up is reliably measurable. What do we mean by commercial substance? When we say commercial substance, it means that the future cash flow of an entity are expected to change as the result of the transaction. whether a change of the value of the cash flow, a change of timing, or a change of risk due to transaction. If the exchange has a commercial substance, the intangible asset is initially recognized using the following order of priority. The first priority is the fair value of the asset given up plus cash paid or minus cash received. Again, plus if we pay the cash or minus if we receive a cash. And the second order of priority is the fair value of the asset received. So what if there's no fair value or the transaction lacks of commercial substance? In that case, we will using the third order of priority, which is the carrying amount of the asset given up plus cash paid or minus cash received. I have here an example of how do we journalize it by using the order of priority. Kate exchanged its machinery and 20,000 cash for 5 patents. The machinery has the fair value and carrying amount of 200,000 and 150,000 respectively. The patents have a fair value of 210,000. The first journal entry here, which we will be using the first order of priority, which is the fair value of the asset given up plus cash paid or minus cash received. We debit here patent 220,000 that we get from the fair value 200,000 plus 20,000 cash we paid, in total of 220,000. Credit machinery 150,000 that we get from its carrying amount. Credit cash 20,000. The difference of our debit and our credit is our gain, which is the 50,000. Next, we will be using the second order of priority, which is the fair value of the asset received. We debit here patent 210,000, which is already given that the patents have a fair value of 210,000. We credit machinery 150,000, credit cash 20,000, and also our difference here is our gain, which is the 40,000. And lastly, the third order of priority, which is the carrying amount of the asset given up plus cash paid or minus cash received. We debit here patent 170,000 that we get from the carrying amount 150,000 plus 20,000 cash we paid, in total of 170,000. Credit machinery 150,000, credit cash 20,000. And have you noticed that there is no gain or loss that we journalize here? It's because that if we will use carrying amount, it means that there is no gain or loss that we will record. And now, let's proceed to the last mode of acquisition, which is the internal generation, or in other words, self-creation. The costs of self-creating an intangible asset are classified into two costs, which are the research costs and development costs. The research costs include costs of searching new knowledge and identifying and selecting possible alternatives. And development costs include costs of designing from selected alternative and using knowledge gained from research. More information about research and development costs will be tackled by our next reporter.
Research and development expense. In research and development expense, research costs and development costs that do not qualify for capitalization are expensed and disclosed as research and development expense or R&D expense. Only those expenditures incurred in R&D activities are considered R&D expenses, and those expenses incurred on non-R&D activities are not R&D expenses but rather regular operating expenses. The following are not R&D expenses but rather regular expenses. First, costs incurred during commercial production. For example, troubleshooting during commercial production, periodic or routine design changes to existing products, modification of design for a specific customer, design, construction, and operation of plant that is feasible for commercial production, engineering follow-through in an early phase of commercial production, and quality control during commercial production. Second, advertising and other marketing expenses, and third, training costs. In recognizing R&D expense, there are research and development example activities that will help you to easily determine the expenses included in R&D expense. Let's have first examples of research activities. So research activities includes activities aimed at obtaining new knowledge, the search for, evaluation and final selection, applications of research findings or other knowledge, and in the search for alternatives for materials, devices, products, processes, systems, or services, and the formulation, design, evaluation of final selection of possible alternatives for new or improved materials, devices, products, processes, systems, or services. In the development expense, the following are the example activities. This includes the design, construction, and testing of pre-production or pre-use prototypes and models, the design of tools, jigs, molds, and dies involving new technology, the design, construction, and operation of pilot plant that is not of a scale economically feasible for commercial production, and the design, construction, and testing of a chosen alternative for new or improved materials, devices, products, processes, systems, or services. At this time, we will tackle about the treatment of research and development cost. So in research phase, cost or expenditures incurred during this phase are expensed immediately since at this phase we are still searching and we can determine if it meets one of the essential elements for capitalization, which is the future economic benefits. In development phase, costs incurred during this phase are generally expensed. However, they are capitalized if they meet or the entity can demonstrate all of the following. First, technical feasibility of completing the intangible asset. Second, intention to complete the intangible asset. Third, ability to use or sell the intangible asset. Fourth, probable future economic benefit. Fifth, availability of adequate resources, alternative needed to complete the development. And lastly, reliable measurement of cost of the intangible asset, meaning you can determine the amount or cost of the development for capitalization. All you just need to remember that R&D expense include only those costs incurred before commercial production is feasible, and that the terms such as commercial, customer, and market or marketing are not recognized as R&D expense, but rather regular operating expenses.
So let's have a sample illustration of R&D expense. Tyson Company incurred the following costs during 2021. Modifications to the formulation of a chemical product of 360,000, troubleshooting in connection with breakdowns during commercial production of 450,000, cost of testing prototype and design modifications of 600,000, seasonal or other periodic design changes to existing products of 5,000, and laboratory research aimed at discovery of new technology of 675,000. So in its statement of profit or loss for the year ended December 2021, how much should Tyson Company report as research and development expense? So as you can see in the solution, only the following costs are recognized as research and development expense. These are modification to formulation of a chemical product of 360,000, cost of testing prototype and design modifications of 600,000, laboratory research aimed at discovery of new technology of 675,000 with a total of 1,635,000 pesos. So 1,635,000 pesos is the research and development expense that Tyson Company should report in its statement of profit or loss for the year ended December 31, 2021.
Items of PPE used in R&D activities. The cost of a PPE acquired and used in R&D activities is included in R&D expense as follows. A. If the item of the PPE has an alternative use, meaning it can be used in various R&D activities or other purposes. The cost of the PPE is capitalized and depreciated. The amount of the depreciation is included as R&D expense. For example, if the entity bought a building for other purposes than solely R&D activities, the depreciated amount of the building is included as an R&D expense. B. If the item of PPE has no alternative use, meaning it can only be used on one specific R&D project, the cost of the PPE is expensed immediately, and it's entirely as R&D expense. For instance, if the entity buys a machine intended only for R&D projects, the cost of that machine is immediately incurred as R&D expense. Items not recognized as intangible assets. The cost of generating an intangible asset internally is often difficult to distinguish from the cost of maintaining or enhancing the entity's operations or goodwill. For this reason, internally generated brands, mastheads, publishing titles, customer list, and similar items are not recognized as intangible assets. Similarly, an internally generated goodwill is not recognized as an asset. The cost to develop these items, including subsequent expenditures on them, are expense.
Subsequent expenditure. Subsequent expenditure on intangible asset are generally recognized as expense because these expenditures are considered to maintain or enhance the asset's existing level of service potential or future economic benefits. So, meaning they were incurred to keep the intangible asset operational and productive. Reinstatement of cost in subsequent period. Expenditure on intangible item that was initially recognized an expense shall not be recognized as part of the cost of intangible asset at later date. This is because the initial recognition as an expense implies that the expenditure was consumed in a period it was incurred and did not result in a creation or enhancement of an identifiable intangible asset. Measurement after recognition. After initial recognition, an entity shall choose as its accounting policy either the cost model or the revaluation model. The revaluation model is only applicable if the intangible asset has an active market. Cost model, the intangible asset is carried at its cost less any accumulated amortization and any accumulated impairment losses. Revaluation model, the intangible asset is carried at its fair value at the date of revaluation less any subsequent accumulated depreciation and accumulated impairment losses.
Amortization. Intangible assets with finite life are amortized over the short term of the asset's useful life and legal life. Intangible assets with indefinite useful life are not amortized but tested for impairment at least annually. The default method of amortization is the straight line method. So, intangible assets with finite lives. The cost less the residual value of an intangible asset with a finite life or finite useful life should be amortized on a systematic basis over that life. The amortization method should reflect the pattern of benefits. Then if the pattern cannot be determined reliably, then it should be amortized by straight line method. The amortization charge is recognized in profit or loss, unless another IFRS requires that it could be included in the cost of another asset. The amortization period should be reviewed at least annually. The asset should also be assessed for impairment in accordance with IAS 36. So, intangibles asset with indefinite useful lives. An intangible asset with indefinite useful life should not be amortized. Its useful life should be reviewed each reporting period to determine whether events and circumstances continue to support an indefinite useful life assessment for that asset. If they do not, the change in the useful life assessment from indefinite to finite should be accounted for as a change in accounting estimate. The asset should also be assessed for impairment in accordance with IAS 36. Types of intangible assets. So the first one is patent. So what is patent? A patent is an exclusive right granted by the government to an inventor, enabling him to control the manufacture, sale, or other use of invention for a specified period of time. Then the legal life of a patent is 20 years in accordance with RA 8293 or the Intellectual Code of the Philippines. So, a patent can be acquired by purchase, in which the cost comprises the purchase price, import duties, non-refundable purchase taxes, and directly attributable cost. If internally developed, costs include licensing and related legal fees in securing the rights. A patent should be amortized over the legal life or its useful life, whichever is shorter. If a competitive patent is acquired to protect an original patent, the cost should be amortized over the remaining life of the old patent. So, patent initial cost, purchase cost, plus direct costs if purchased. Legal and registration costs if self-created. Then patent amortization over short term of useful life and legal life 20 years. And then the next one is copyright. So what is copyright? So the term of protection for copyright is during the life of the author and for 50 years after death. A copyright should be reviewed for impairment by assessing at the end of each reporting period whether is an indication of impairment. So the initial cost of copyright, purchase cost plus direct cost if purchased. All necessary costs that meet all of the conditions for capitalization if internally generated. So copyright amortization. Over shorter of useful life and legal life equal to the creator life plus 50 years may be expensed outright if internally generated. And then the third one is franchise. So what is franchise? Under the agreement of a franchise, one party called franchisor grants certain rights to another party called franchisee. The cost of franchise includes the lump sum payment for the acquisition of the franchise plus directly attributable costs necessary for the intended uses, such as legal fees and expenses incurred in connection with the acquisition of the right. And then, if the franchise is granted for a definite period, the cost is amortized over its useful life or definite period, which is ever is shorter. If the franchise is granted indefinitely, the cost is not amortized but tested for impairment, at least annually. So the initial cost of franchise, purchase costs plus direct costs if purchased. Then franchise amortization, over finite useful life, not amortized if with it definite useful life. So the fourth one is trademark. So what is trademark? A trademark is a symbol, sign, slogan, or a name used to mark a product to distinguish it from other products. The cost of a trademark when purchased includes the purchase price and directly attributable costs. If internally developed, the cost of trademark includes expenditures required to establish it, filing fees, registry fees, and other costs. So, the legal life of a trademark is 10 years and renewable for periods of each 10 years. With this, an entity can classify a trademark as an intangible asset with an indefinite useful life. So the cost of a trademark then is not amortized but should be tested for impairment. So, initial cost of trademark, purchase cost plus direct cost if purchased. All necessary costs that meet all of the conditions for capitalization if internally generated. Then, trademark amortization. Not amortized, legal life is 10 years, renewable indefinitely. And then the last one is computer software. What is computer software or software? Instructions that tell a computer what to do. Software comprises the entire set of programs, procedures, and routines associated with the operation of a computer system. So, the initial cost of computer software. Purchase cost plus direct cost if purchased. Only costs after technological feasibility is established, normally included. Cost of coding and testing after technological feasibility. Cost of producing product master and cost of installation for internal use software. And then computer software amortization over useful life.
Sample problems. Number 1. Francis Company developed a new machine. Since the company regarded it as valuable, the entity had it patented. The following costs were incurred. Purchase of special equipment for machine development, 2 million pesos. Salaries for scientists, workers, assistants, and engineers, 300,000. Prototype testing, 100,000. Patent filing, legal fees, 200,000. Fees paid to the government patent office, 20,000. Requirements. Number 1. How much should be recorded as intangible assets? Number 2. How much is the research and development expense? Requirement number 1. How much should be recorded as intangible asset? The costs directly associated with securing the patent are the legal fees for filing and the fees paid to the Government Patent Office. These costs are capitalized as part of the intangible asset because they represent the expenses incurred to protect and secure the rights to the newly developed machine. So, patent filing legal fees 200,000 plus fees to the patent office 20,000 is equals to 220,000. So our intangible asset is equals to 220,000. Requirement number 2. How much should be recorded as research and development expense? This includes costs related to the actual development of the machine, purchase of special equipment for machine development, salaries for scientists, workers, assistants, and engineers, and the prototype testing are all part of the R&D process. Therefore, R&D expense is equals to 2,400,000. In summary, the intangible asset is the cost of obtaining the patent, the 220,000 pesos. The research and development expense is the cost of developing the machine, which is the 2,400,000. Sample problem number 2. Chair Leader Co. purchased a patent on January 1, 20X3 for 120,000 pesos. The patent had a remaining useful life of 10 years at that date. In January 1, 20X4, Chair incurred 54,000 pesos in acquiring another patent that clearly extended the existing patent's life to December 31, 2015. Requirement: what amount of amortization expense would Chair record in 20X4? To get the amortization expense on year 20X4, first, we will get the carrying amount on January 1, 20X4. To calculate the carrying amount on January 1, 20X4, we multiply the original cost of the patent to its remaining useful life fraction. So, 120,000 pesos times 9/10 is equals to 108,000 pesos. Since in January 1, 20X4, Chair Leader Co. incurred another patent that cost 54,000 pesos and requires to extend the existing patent life to December 31, 2015. Now, the total cost of our amortization is 162,000 by adding the carrying amount of the original patent and the cost of the new patent. Now, to get the amortization expense, we will divide the total cost by the remaining useful life. Since the new patent in 20X4 requires to extend the existing patent life to December 31, 2015, our remaining useful life is 12. So, 162,000 divided by 12 is equals to 13,500 pesos. The amortization expense to record in 20X4 is 13,500 pesos. Sample problem number 3. On January 1, 20X1, DevJu Co. bought a franchise from McDo Co. The franchise requires an initial fee of 15 million pesos, payable as follows: 5 million down payment on contract date and the balance in 5 equal annual installments starting 1 year from the contract date, plus 4% interest on the outstanding principal balance. The current market rate as of contract date is 12%. How much is the initial measurement of the intangible asset? To determine the initial measurement of intangible assets, we begin by calculating the installment-based cash flows. You can find the calculation in the table given. Initially, DevJu Co. makes its first financial commitment on the contract date by providing a down payment of 5 million pesos. Subsequently, the remaining balance calculated as 15 million pesos minus 5 million down payment is equals to 10 million pesos. This 10 million is what they're going to pay through annual installment. Since DevJu Co. commits to paying the remaining balance over 5 years in equal installments, therefore,
10 million pesos divided by 5 give us 2 million pesos. This 2 million pesos is now the principal amount for each annual installment. To calculate the amount of the interest, we take the remaining balance of 10 million pesos and apply a 4% interest, which give us 400,000 pesos. Then we add this interest amount to the principal amount of 2 million pesos. The total amount to be paid in January 1, 20x2 is 2,400,000. Here, in January 1, 20x3, we get the 8 million by subtracting the principal amount to the remaining balance, which is the 10 million. Same goes to the following years. After computing the cash flows, we will compute for the future value of the cash flow to get the initial measurement of intangible assets. The table displays the breakdown of the calculation. Since we made a 5 million down payment on January 1, 20x1, we will include this in our cash flows. Our N here is 0 because we begin payments in the following years starting from the contract date. The present value factor is 1 because any number raised to the power of 0 is 1. Multiplying this by the cash flow of 5 million gives us 5 million pesos. The same calculation applies to the following years. The sum of the present value will now become our initial measurement of intangible assets, which is the 13,139,702 pesos.